Okay, we are live today. I'll let people roll in a little bit. Hi, I'm Anthony Parent of IRSMedic. This is going to be a fantastically fun podcast as we dissect as much as we can parts of the Republican one big whatever tax bill it is. It's really something else as we've been diving into it. Is if you follow us, you know we're a little bit suspicious of what's going on. And last week we dipped our toe into the first review of the bill. And a few sections really stuck out. And, really one of the things that have gone on is this channel has really been dedicated to ending the misery of double taxation for Americans overseas. It's something that my firm has done since 2009. I'm a tax attorney. I got into it and I saw firsthand the abuse and the insanity behind the entire hustle, how the government makes us all miserable with this humiliation ritual, and it's nowhere more apparent in expats with rules that can't be understood and intentional vagueness. It's really been one of the greatest abuses of all time, and it's right under our noses. So we were incredibly excited last year when President Donald Trump on the campaign trail made it an explicit promise to end double taxation for Americans overseas. Hallelujah. The time was come, and we were incredibly, incredibly excited. A little bit suspicious, but excited. And what we got was we were promised, and I wanted to mention this to Keith. So Keith, welcome to the show. And Keith, we were promised we were promised relief. We were promised relief for Americans overseas. And we're not going to be talking about the whole bill, but we're really going to just be talking about how it affects Americans overseas today. Yeah. And I have some bad news for you, my friend. I have some bad news. Keith Redmond, Keith is the formidable Keith Redmond, runs the Americans Expatriates Facebook site. He has about 12,000 members he represents, and a lot of people suffering from the same misery. So Keith, I got some bad news. This bill does not offer any relief, and I think, as we'll get into it a little bit more, I think some punitive additional hurdles, more compliance, more taxes for some, more complications for sure. So I think we got some really bad news. You want to hear how bad? Are you excited to hear how bad?
Yeah. I mean, I'm not, what can I say? I mean, personally, I'm not surprised. But I would like to know how bad is it going to be for Americans overseas, or at least a certain portion of the population. Yeah, obviously, there's nothing in the bill about double taxation.
Nope. And it does all. It all looks like a big rope-a-dope, and it looks like. So we're going to get into that a little bit. The great John Richardson is with us. The great John Richardson is with us, and he's got a presentation. So we're going to start in with John's presentation. I really think that's the best place to start. So John has that. John runs Citizenship Solutions, and he is the esteemed John Richardson. So let's get off. Let me start with. I do have the first video we want to show. Let me just share that video link you shared. This one actually. This is Donald Trump speaking. And I think this is where is this, John? This is at the
other one. I think you want the other one.
Okay.
That's
this is the remittance tax.
Right. I think maybe you want the general one.
Yeah, this one. This is the one.
That's not the general one.
American workers and families. Instead of taxing our citizens to enrich other countries, we will tariff and tax foreign countries to enrich our citizens. For this purpose, we are establishing the External Revenue Service.
Okay, you can cut there.
To collect all tariffs.
So, the big beautiful bill is, in fact, the rollout of the External Revenue Service.
Oh, wow. Okay.
I mean, if you look at this contextually, I was thinking about this last night, I spent a good part of yesterday putting together a blog post on the unfair tax one that I'm sure that we'll talk about, but I think it's important. It's so easy with anything to do with tax because of the complexity of it to lose sight of the bigger picture. Okay. And Anthony, as you know, as goes taxation, so goes civilization.
Absolutely.
No, taxation is destiny, not only for individuals, but for countries. And interestingly, what we're seeing here is if we look at the tax code, since 1966, the U.S. has had a tax policy that has encouraged capital to come into the United States.
Yes.
Generally preferential taxation, et cetera, et cetera. Now, interestingly, in 1966, I know many of the listeners here are Americans abroad, that actually planted the seeds for the 877A exit tax as well, because at the same time that the laws were amended to encourage foreign capital to come into the United States, it became pretty clear that the United States taxed its own citizens far more punitively than non-citizens. And as a result of that, we have the beginning of what eventually literally ended up today as the 877A exit tax. In other words, we'll punish you for trying to leave. Now, what's interesting about this is that, we can look at this stuff sort of as isolated events, right? But we talk about, notice President Trump's statements. He says we will tariff and tax, right? So people are beginning to come to terms with the idea of the tariff. And sure, it's paid by the American people, but because it's an extra cost, it also has the effect of, closing down exports to America. It also, interestingly, and I think this is a point that is never discussed in the media, or at least under discussed. And this really hit me a week or two ago when I was looking at a New York Times article about Honda had decided to not continue manufacturing something in Ontario, Canada, but decided to move it to the United States because of the tariffs. Now, let's look at what that actually means. Okay. What it actually means is that the United States, not only does Honda move to the United States, but because it clearly has a permanent establishment then in the United States, it opens up the profits from that to be taxed by the United States, right? So this tariff thing is also indirectly a process of stripping the tax base of other countries, because to the extent that companies will move to the United States, and we've seen Howard Lutnick say time and time again, well, all you have to do is make it in the United States to avoid the tariffs, right? What this really is stripping the tax base of other countries. So, so we have that going on as well.
Well, and I just want to, you made me think of this, John. I just kind of want to put it up because we had, you just had me put that quote up from Trump to say, hey, look, we're going to impose taxes on foreign countries to enrich our citizens. Okay. Did you see any tax on any foreign company, on any foreign country in here? I didn't see one tax on any foreign country.
No.
Yeah, I don't think foreign countries are taxed. So I think there's
but it's a tax on the nationals, right, of other countries, to be sure, right? If we look at the 899 tax, for example, I mean, that is extraordinary. The remittance tax, which we'll also talk about, is interesting in that the people primarily impacted by this are going to be non-citizen legal immigrants. Not these, sort of undocumented immigrants.
Yeah, absolutely. Yeah, right. All right. Well, let's get into your presentation here. All right. We started off with that. And
Yeah.
so,
we can talk about two examples here that we've already discussed to some degree. And by the way, I am certain that there are more, but I don't have enough years left in my life to dissect this bill. Maybe you can, or maybe we can get a committee to do it, right?
I'm hoping it implodes under its own absurdity because it is absolutely, yeah.
But make no mistake about it. And I will say also that if you look at the outline of it coming from Chairman Smith's office, the Ways and Means Committee, the description of it is an outright lie. It's an outright lie, and the way they put these sections in various categories. For example, putting this excise tax on remittance transfers in a category to target illegal immigrants is, it's so outrageous that I think it can be characterized only as a lie and an attempt to deceive. But so here we have two very clear examples of essentially taxing the capital of citizens of other countries, right? Okay. Now, they haven't gone so far as to put a tax directly, perhaps, on Canada.
John, I just want you know what? When I was looking at your thing, I want to introduce you really, really quickly. Just something that if you could help me out with, because you had a link on your to the Republican bill section by section. So let me get this up. Let me get the screen share, show people what I'm looking at. Let me get this up here. Here we go. Come on, get there. Let me get this here. Okay, so John, you had section 112.209, and that's what we're looking at here. Section 112.029, 029, okay? And then you had this, which on your site, which was confusing me because I was looking for 112.029. Oh, maybe I have it 112.029. So it's up here. Oh, okay, here it is. So this is the section is okay. Thank you very much. All right. Well, I'll let you go back, John. I think I got it. So that's where we are in the bill, just so people know. Okay, go ahead.
Right. Okay. Now I don't know how you want to do this. Talk about each of them, one at a time, or talk about them generally, or.
I think we should talk about the excise tax on remittance transfers first.
Okay, that's fine.
Okay.
It's basically what it is any non-citizen who sends a remittance in the United States is subject to a 5% tax. It's not, I do not read it as you have to send money out to outside the United States. Okay, it's any remittance at all.
Any remittance, and I guess it comes down to what is a remittance? Let me get on screen
That's right.
What is a remittance? Here we are where it is, and so what counts as there's going to be a penalty involved, right? And then there's going to be a carve out, and if you use certain providers.
Okay, here's how it works in general. Okay, I'll make it as simple as I can. All right. So the first section provides the general rule that there's a 5% excise tax on remittance transfers, whatever those are. We move down a couple of sections, and it provides a carve out for verified
U.S.
citizens and nationals who send the remittance through an authorized remittance transfer person, who's somebody who's entered into an agreement, with Treasury to police this sort of thing, right? And then thirdly, for U.S. citizens and nationals who send a remittance, pay the tax. All right, in other words, the carve out would exempt them from the tax altogether. Okay, so go with your passport to an authorized, remittance person. You fill in a bunch of forms. Okay, sign your life away, and you can avoid paying the 5%. If you don't do that, then you have the opportunity to get a tax credit for the amount of the transfer. But the problem is that, there's all kinds of procedural rules associated with getting the tax credit, including providing the Social Security number of your spouse, etc.
Oh, okay. All right. This is so much more government.
Yeah, but also, I do not read it as being a refundable tax credit. Okay, so it would be
it's refundable. No, it is. It is a refundable credit.
It is?
It says it right here.
Okay, if that's the case.
Yep.
Then I'm mistaken. All right. So, all right. So refundable. Okay, that's fine. So if it's refundable, good. But, you still have to go through the bureaucracy to claim it.
Oh yeah, no, and you'll miss it, and then and I mean it's going to be you missed a deadline to claim your refund, right? Because that's the way it works.
I mean, the reality is that most people will not go to the trouble.
Okay. Oftentimes, right? A lot of times, so it's just a stealth tax. Now they have a credit for excise tax on remittance transfers. A credit.
You sure it says refundable? I don't know how I missed
it. I'm looking at it right here.
Okay. All right.
Yeah.
Application. All right. I have to look at it again. Okay. For some reason I missed that. Okay. Well, whatever. Anyway, this is now bear in mind, okay, a couple of other things here, okay, that this is, I think, arguably double taxation.
Of course.
Okay.
Yeah.
Well, not always, but I think it's arguably double taxation. Does that have any bearing on the tax treaties? I don't think so, because the U.S. tax treaties speak of income tax.
Right, and it says,
excise.
Thank you. That's what I saw right there. So you're going to be hit with an excise tax that you can't use a foreign tax credit against.
Yeah.
So I was like, that's cute, of course.
So maybe it's a tax treaty override, though. I don't know. Okay, I mean, that's an interesting question. Certainly the other one that we'll talk about is. But what I find most interesting is and we only, we read and understand things through the prism of our own experience. And, of course, I've never, been a person sending remittances around the world. But, I found some very interesting articles written from the perspectives of Mexico and India that, really drive home what a big issue this actually is, right? I mean, the numbers are staggering. They're in the billions of dollars. This is clearly, an extra tax on being in the United States, on these people, no matter what. And, the point here is that the United States is sending a message that, whether it's through tariffs, whether it's through this type of thing, that it's too expensive to deal with the United States. And I think that, particularly when it comes to, foreign students and that, I think that they're going to, you're going to get a growth, right? And overwhelmingly a critical mass of people who just, look elsewhere. It's too difficult. It's too expensive, and then, add to that the problems at the border. Whether escalated or not, they're clearly being escalated in the media coverage. There's no doubt about that. There's an escalation in media coverage. So, this is not a good thing for the United States. It's clearly a bad thing for nationals of countries where their citizens send a lot of money home. I saw something interesting, a suggestion that El Salvador would be particularly affected by that. I immediately thought, well, given that the U.S. wants to deport people to El Salvador jails, maybe they could have a carve out for El Salvador. Cut some sort of a deal there. I mean, this is really terrible.
So, if I may interrupt, I just want to ask a question here, just not knowing anything about this. How will this affect Americans overseas? So, for example, I'm in France and I want to bring money from the US into my account in France. Will that affect me that way?
No.
Okay.
No, because you're not, it's remittances originating in the United States.
Well, okay, so let's say Social Security. I get my Social Security payment into my bank account in France.
Right. So the question is whether that's a remittance.
The answer is yes. So I looked this up. So I just looked it up very quickly to what is a remittance, and it's kind of an off-the-shelf thing. So I could read off what a remittance is. It's a electronic transfer of funds requested by a consumer, a sender located in the United States to a recipient located in a foreign country, conducted by a remittance transfer provider, regardless of whether the sender holds an account with the provider or whether the transfer qualifies as an electronic fund transfer under the EFTA. So sort of a nested definition in there as well.
Where are you reading that definition from, Anthony?
That is from 15 USC 1693 little o 1G.
Okay.
Okay.
You want
So,
to pull
so
that up on the, can you?
Yeah, here I actually had. Yeah, here. Let me get. Let me share that.
So based on what you just read, Anthony, I go back and ask my question again. If I'm sending money from an account in the U.S. to France, that's not included into this tax situation, this 5%.
It would have to be, it's not a wire from a bank, but it's when you're using a service like MoneyGram, essentially. That's more or less
Okay.
what it is. And
Okay.
I have used, I would send money overseas a lot. Using MoneyGram, and this is sort of the thing is that what I noticed is like, look, you look at the people online, man, everyone's working their butts
Right.
off, and that's what I find so obnoxious.
So you're talking about MoneyGram. What about something like PayPal? Or
PayPal. Oh, I don't. That actually could be one. Keith, I don't know. And that's a funny thing, right? It's like, well, MoneyGram is, and that's where we get into these, we go down deep into these things, and it's kind of funny. They had this definition all ready to go for something else. Now we're going to tax it, right? So the federal government defines something so it later can be taxed. And this is just one of the most obnoxious taxes possible because people waiting in those lines to send money to their families overseas work their butts off.
Yeah.
It is utterly disgusting. This is one of the most, this is our government in action here. Really, and people who've been whacked with it, you're working, the stealth taxes on your employment. People don't see that. People don't see the other taxes. So, the government's just absolutely against all Americans, and it's right reflected in this tax code. And I think one of the things that really bugs me is all the people who are rah-rahing this tax code is very one simple question. You ask them one simple question that will shut them up so quickly. Did you read it? Did you read it?
Exactly.
And they can't answer it because the second they do, you're like, oh my God, yeah, what's so great about it? It's amazing the level of ignorance. And I think what's really interesting is how the population is manipulated. How you have a large segment of the population manipulated into believing that this could possibly be a good thing. That this could possibly be a good thing. Hey, it's Washington, D.C. with another bill that, well, I don't really understand it, but the talking heads on the TV tell me it's a good thing because it's doing something. It's really getting those foreigners, right? We're getting those foreigners while also destroying Americans' interest. So this is what we have on. So again, I'm just talking about this.
Are you able to put the actual statute up where this is? Because that's got a lot of stuff. Like I understand, that you're getting that online, but can you put up the actual statute, or maybe let's do it later? Because okay, so here we go. All right, now keep going down here till we get to the definitions. Okay, I think you got it. Hold on. Find remittance transfer and click on it somewhere, which should take us to a definition. That's
that's
the provider.
All right.
Keep going.
I'm gonna go. Okay. Here we are, right here.
Remittance transfer. Click on that. Okay, see if you can expand that a little bit. Okay, so I can read it. I looked at it before. Okay. So here we go. Remittance transfer means the electronic signatures, blah, 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 transfer of funds requested by a sender in any state to a designated recipient that is initiated by a remittance transfer provider, whether or not the sender holds an account with a remittance or whether or not there is also an electronic define. Okay. Anyway, Keith, the bottom line here is this, that it's not entirely clear where the definition of remittance transfer ends and something else begins. Okay.
Yeah.
I find it very hard to believe that something like Social Security would be a remittance transfer. Okay. What this is clearly about, what it clearly includes would be, Western Union, or as Anthony says, MoneyGram, this sort of stuff. Right.
Maybe PayPal. Who knows? PayPal's used around the world. Yeah.
Yeah, and apparently there's a smaller value transaction by rule. So who knows what that is? So they could determine small value by rule. And here's another example of Congress just giving the rules to the.
But listen, one thing that we don't want to lose sight of here is that it clearly affects people who have difficulty with normal banking arrangements.
That's right.
Okay, that's
For a host of reasons.
Right, right.
Yeah. I mean, the fact that people would be cheerleading this. All right, let me go back. We'll go back to here we go. Yeah. And so John, here's your slide on this. You're saying remittance tax is not about creating is not about creating difficulties for the undocumented. It's double taxation.
Yeah, it's essentially confiscation of the assets of legal immigrants who've already paid tax on the money. Is what it is.
Yeah. Yeah.
This is incredibly obscene, right? And the fact that U.S. citizens are specifically excluded may make it unconstitutional, okay? Because that's, clear discrimination based on alienage, et cetera. But, this is about as nasty as one can imagine. It really is. And
where's this so much?
It's sort of like, and the reason they get this stuff through, right, is because, it doesn't affect, sort of normal everyday Americans who are not immigrants, and don't have, a family abroad. Now, where it would affect a U.S. citizen abroad, Keith, would be if you have a U.S. citizen abroad whose parents, who's trying to receive money from the United States from a non-citizen, right? Then it could affect.
Okay.
Well, here we go. All right, we got a little debate going on in the chat, which we like. Okay, so on one hand, we got this. Rob B saying, "Hey, look, illegal workers are stealing by default."
That's completely false. They pay taxes. They pay
exactly.
And they pay Social Security taxes, and they never get the benefits of those taxes. I mean,
exactly.
The illegal workers are probably there. Let me tell you something. Professor Francine Lippman is a law professor at the University of Nevada, Las Vegas. I was reading. She's really the expert on this, and she's written fantastic stuff on it. But I was reading an article written by her a number of years ago, and I was reading this thing. Oh my God, this is exactly like the taxation of Americans abroad. I mean, the only thing on a par with the taxation of Americans abroad is the way the U.S. taxes undocumented immigrants, or whatever you want to call them.
I don't know. I mean, I think Rob's got a little bit of a point, though, because, if someone is an illegal worker, they're not filing. It's typically they're not filing. That they don't have to. I guess this is it. They're stealing because they're not forced to pay the compliance costs, I guess, if that's what we want to do. They're stealing in that they're not.
But the point is that a great many of them do file.
Exactly.
Social Security taxes. Okay. This image of the.
Okay. So fair enough.
Yeah.
All right. So I would say it's and I would say this. It might be an inflammatory statement. Legal workers are illegal by default. Stealing is a little bit much. I don't think that's really true, because we have people get a little upset over that, and it's like, and this is the problem, Rob. Though it's like when we make that debate. This is what I don't like about going that way, and I think Joe B. Kenobi's a little upset there too. I don't think you're a dope. I don't think anyone's a dope. Let's be nice here, but I think this is really what is that it's the conquering and dividing, right? This is what I really don't like, is when you have the government say, "There's the enemy. Let's tax them," and that's what we just heard from Trump. There's the enemy. Let's tax them. Guess what happens every single time that is authorized? You are the enemy. And you just authorize them to tax their enemies. Guess what, buddy? You're an American person. You're the number one enemy of the American government. And how much they hate you depends on other factors. We've talked about that before. So that's what I would say, is like, let's not fall into that trap thinking that by punishing someone else, there's a benefit for us. But rather look at the people who are willing to punish as, maybe they will punish me too. Maybe I shouldn't give them any more power. That's really one of my biggest problems I have with this. All right, so let's move on to your next slide here. And we'll move that inflammatory comment off there, Rob. How dear. Yeah, we appreciate that, Rob.
Well,
thanks.
It's not, no, I mean, it's a fair comment, okay, in the sense that, that's how a lot of people view it, okay? But, the fact that a lot of people view it that way, doesn't make it true, right? I think part of the problem in the United States in general, right, is that nobody can be in compliance with anything anyway, right?
No, you can't. No,
The
no.
question of, who on any given day gets sort of picked up, right, for being in non-compliance. I mean, the whole legal system and tax system is essentially weaponized against anybody they want to weaponize it against. But anyway.
Yeah, and that's why you should never cheerlead. You should never cheerlead to say, oh, yeah, this is a great thing. No, everything's terrible. Nothing comes out of Washington, D.C. that you want. It never, ever is and never will be. Sorry, John. So next slide. Oh, Ohio. Oh, boy. So
well, this was just, I did a podcast on this with Laura Snyder a few days ago. And she pointed out to me, this is just by way that it's not only the U.S. federal government's proposing remittance taxes, okay, states have them as well. Ohio, a number of states, courtesy of Laura, I know Ohio does, Oklahoma does. I mean, there are various states that have this stuff going on as well.
Well, Ohio is sort of a running meme in tax Twitter. It's the worst state. I mean, it is really the worst compliance state by far. They're really bizarre. Ohio is really, when you have a client, when you have a client from Ohio, oh boy, it's really a tough. And so it doesn't surprise me that Ohio would, because they're very innovative in taxation. Really, you have a lot of people. Oh, you know what? I think more people from Ohio have become president than any other state. So. Here's why, I guess, because super aggressive taxation, the breeding ground, right?
And actually, this is just, I mean, let's be clear on what this is. This is just pure confiscation.
Yeah,
right?
Yeah, just absolutely. All right, so now I want to go back, because, John, I want to talk about Section 899.
Yeah.
I want to go back, because I am not sure, because I sent you a tweet yesterday.
Yeah.
Saying, hey, this thing appears, and let me get my screen up here. Which one is it here?
So, I think we need to begin with an overview of what it even is before we start pushing.
Yeah. Okay. Great idea. Yeah, I think that's a real solid idea. So I can get the actual bill up.
Well, I don't know. You can get it. Yeah, sure, get it up. But I mean, if we try to explain this through the bill one section at a time, we'll be here till next week.
Okay. All right. Very good. Okay. Go ahead.
I mean, I think what we need to do is just, as a general principle, talk about this. Now, I think I'm going to try this. I'm going to simplify it by answering the question, how does it affect the individual in the most basic sense? Okay. Now, so I almost feel like I should get into the history of this, but I'm gonna not do that. I wrote a long post on it, but the point is this: that the United States of America, the one country in the world that claims the right to enforce extraterritorial taxation on the rest of the world, believes that if another country does something like that, it's an unfair tax. So the first thing that needs to be understood about this particular statute is that what it really should be titled, remember the titles are always a lie, what it really should be titled is, only the United States is allowed to engage in unfair taxation. That's what we mean by the international order or whatever, okay? All right, that's what it means. Only the United States can engage in unfair taxation. If another country does it, it's unfair. Now, the bill goes through a number of types of unfair taxation, and arguably could be read as giving the Treasury Secretary the right to deem anything unfair. Okay, with some small exceptions. But one of the things, I'm going to use this as an example because it's easy for the average person to know what it is, and a lot of countries have already enacted this. Now, what the bill says is that any country that has a digital services tax, by the way, and remember, I'm giving one example of what the bill says to make it clear how it works, okay? So basically, a digital services tax is, let's say that Facebook sells advertising in Canada or the UK. Now, obviously, they don't have a permanent establishment. All right, in Canada, they just sell this stuff, right? And because they don't have a permanent establishment, the tax treaties generally would prevent Canada or the UK from taxing those profits. So to get around that, so I mean, to be clear here for a minute, I mean, come on, are you seriously saying that Facebook can go into other countries, utilize the population base, come on in, get them to pay Facebook, right, et cetera, and somehow, the governments of these countries can't tax that? I mean, that sounds really out of sync with the modern world, all right? But in any case, their response is, well, we're going to invent these digital services taxes, right? And these are a revenue tax based on revenues generated by selling Facebook advertising or something like this. And because they're not income taxes, they're outside the scope of the tax treaties, okay? So what's happening is that a number of countries have enacted these digital services tax, and the claim of the United States is that this is unfair. In other words, I mean, to be clear here, this isn't particularly theoretical. What the U.S. is saying is that no, you should not have taxing rights to profits made by Facebook in your country because we want all the taxing rights, even though those profits are made by selling to, residents of Canada or the UK. Now, I appreciate that, there may be differing views on that, but I think that clearly the growing consensus in the world of international tax is that no, the governments that, pay for the populations that buy these products ought to have some taxing rights. But in any case, the point is the digital services taxes make deem the country to be a discriminatory country. So Canada would be a discriminatory country. Don't forget also the underused housing tax that we've talked about. That would be another example. And so what the response to this, the U.S. response is that, okay, so you know what? If you're going to do this to Facebook, and you're going to try to steal, get into our taxing rights, lower our tax revenue, what we're going to do is we're going to put punitive taxes on your tax residents who come to the United States to invest. Okay, are you with me? Now just imagine this for a minute. So you've got some, poor schmuck in Canada, who's got a portfolio of U.S. stocks in the United States, already taxed on those at a reasonable rate by the United States. Now, this person is the target of this legislation. They are going to be punished. Okay, they haven't done anything, but they're going to be punished. They are responsible for paying the price of the government of Canada enacting this digital services tax on Facebook. So the way it works is that basically what happens is that an extra 5% tax gets added to whatever it is, whatever tax they would normally be required to pay. And it's an additional 5% every year for 4 years, up to a maximum of a 20% higher tax. And this applies to almost any non-US citizen interaction with the United States. So, the way I'm interpreting this, under the U.S.-Canada tax treaty, the U.S. at present would tax a Canadian investor in U.S. securities at 15%. After year one, it goes to 20%, year two, 25%, year three, 30%, year four, 35%, right? So, that's essentially what it is. And, this is, and it's amazing to me that this is not getting any coverage so far in the Canadian media. And that maybe it's just, one of these things that's not easy to understand, right? But really, at a bare minimum, okay, it makes the cost of investing in the United States far, far more expensive, right? So, I mean, that's what it is at a minimum.
John, that was a wonderful explanation of really what it's about. And I think that your idea that it's only the United States is allowed to engage in unfair taxation. And the way that it works is that, if a foreign country is taxing you punitively, the U.S. may tax you punitively because of that punishment. Because you were punished, the tax code says you should be punished again. Now,
Well, it's guilt by association, right?
yeah. Now, if we recall, Keith Redmond, we were promised something here. We were promised some relief, an end to double taxation for Americans abroad. Is Section 899 what you were looking for? Now that you kind of know what it is a little bit, and what other questions do you have about this, Keith?
How is this relief for Americans overseas? I don't understand. I mean, I hear what you guys are saying.
Well,
I
it's
just-
relief because as U.S. citizens, they're exempted from these punitive taxes.
Well, that's
Okay.
where and John,
Look at it that way.
John, and this would be a great segue because I still am I'm still not convinced because last night I sent you that tweet saying, John, help me understand Section 899 because the way that I read it is that it applies to
U.S. citizens?
it's owners of CFCs. So let me just get this one up here. Let me just switch over to this one here, right? Is this? Hang on a second. We have so many screens open. I have a lot of screens open here. We got a great show. We're working hard for you. Let me get another. Okay, so we had the. Okay. So, John, here I am. This is the section and just to give some people some background about what I was looking for help and where I'm still confused at this. Still confused. We are here in the definitions. I'm going to go up a little bit of this section. Okay.
The definitions of what though?
Yeah, I'm getting up that. Applicable person. Who is an applicable person that this will apply to? Section 899.
In other words, what kind of people are hit with this tax?
Exactly.
Okay.
Okay, so here I am, applicable person. I go down, okay, one, in general, except as otherwise provided, okay. The term applicable person means, okay, going down.
Hey, stop at B.
Yes.
Any individual other than a citizen or resident of the United States. Doesn't that preclude, in and of itself, including U.S. citizen owners of CFCs?
Absolutely, and that's where I was at first. I'm like, okay, this is good. It doesn't apply to them, but I kept scrolling down, okay. and that's where I said, "Whoa, what's this about?" So
okay, let's go down. Okay.
So in this and not foreign court, I'm not talking about this, not C, not D, but E. E is where it said any foreign corporation other than a publicly held corporation, if more than 50% of the total combined voting power of all classes of stock of such corporation entitled to vote, or the total value of the stock of such corporation is owned within the meaning of the CFC rules. That's what 958A is, by persons described in this paragraph.
Anthony, focus on the language by persons described in this paragraph.
Yes.
It's applicable persons. That's who's described in the paragraph, applicable persons. Remember, this does not apply to U.S. citizens or residents. Well, what that is saying, and I appreciate the difficulty because, I had to read it. I read it a number of times after seeing your tweet.
Right, yeah.
What I think it's saying, Anthony, is this, let's pause for a minute. Again, it's horribly phrased, right? But so we understand that it would be a controlled foreign corporation if more than 50% of the ownership was U.S., right?
Right.
Okay. Now, what that says is if more than the foreign corporation becomes an applicable person if more than 50% is owned by people who are applicable persons, meaning they're not.
Oh, okay. So, all right. I think I might see. So we have kind of another nested definition in here. It seems like something like that, John.
It's so horribly phrased.
So, and I had it, and I just lost it again. I was about to restate what you said, and now I lost it.
You want me to try it again?
Try it again, and I'll try not to interrupt you. Yeah.
Okay. So go back to the top and understand what the paragraph is defining. Applicable person, okay? I think you need to keep that in front of you as you read this, okay? So an applicable person is the filthy foreigners who's subject to the tax, right?
Okay.
In fact, they should just call it "Who's a Filthy Foreigner." Okay. Now, start scrolling down, but stop at B. Now, any individual. Okay. Pause. Any individual. Okay. Other than. Okay, a citizen or resident of the United States is a tax resident of a discriminatory foreign country. Notice it says tax resident, right? So here, this is deferring to the law of the other country, isn't it, on that issue? But anyway, next. Okay, now, so they're going to include foreign corporations generally. Continue on down here.
An individual who is a tax other than, all right, so B cannot apply to citizens or residents of the United States.
That's right.
Okay, got it. All
okay.
right.
Now,
I'll
go back up to B again, just for a minute. Hang on. Yeah, okay, I agree. Continue on now down. So C is just generally foreign corporations. Okay, go ahead. Continue on down, which are tax resident of a discriminatory foreign country. Yeah.
Okay.
Foundations, I don't even know what they are. Forget that. So let's just go to E now, and let me help you.
Okay.
And help me and help anybody who's remotely interested in this understand this. Now, it says any foreign corporation, if more than 50%. Okay. Now, the first thing I want to point out, Anthony, is that the issue is whether the foreign corporation is an applicable person, not
right.
shareholders. Okay. Yeah.
Oh. Okay.
Maybe that ends your confusion, right?
That I think is because it's like if more. Oh, right, and it's not describing. It's describing the ownership of the corporation, but the ownership of the corporation description isn't making it onto the shareholders.
Okay, so it's the foreign corporation that would be the applicable person. But if now we move to the ownership, if more than 50% of the ownership is not U.S. persons.
So it's like the obverse of a CFC.
I guess so, something
it's
like
your reverse CFC.
They shouldn't be using. They shouldn't. I don't even see why this is necessary, because go up to the other one. They talk about foreign corporations. Oh no, now I understand why. Oh, now I understand exactly why they've done it that way. Okay, I've got it. All right. The reason is that they want to prevent a controlled foreign corporation, a U.S. controlled foreign corporation, from being an applicable person.
Right. Okay.
So Anthony, you go over to Ireland and say, I want to be like Apple, and you set up a CFC, and you're a U.S. citizen, so you're the sole shareholder, right? Now, because the CFC rules attribute the income of the corporation over to you, what they don't want is a situation where that corporation gets dragged into this somehow, because then you're no longer taxing foreigners per se, you're taxing in substance U.S. persons. So the way this is drafted is, so we start with a foreign corporation, and what they're saying is, as long as the foreign corporation ownership is such that it would not be a CFC, then it's an applicable person. But if it were a CFC, then it would not be an applicable person. Or to put it another way, what E is doing, what it really should say is this, okay? I don't know why they've drafted. Undoubtedly, there's a reason. But it strikes me as ridiculous, because what they really should say is any CFC within the subpart F and guilty rules is not an applicable person. I don't know why they can't just say that, but
any foreign person. All right, yeah, and I mean this is really going now exactly. So any foreign corporation that is not a CFC, okay, is going to be subject to this tax. Now, what's the thing that they're going to do that triggers this tax?
Well, it's not that they do anything. Well, what does is they have some kind of investment in the U.S. or U.S. source income. That's
okay. All right. So all right. So essentially, this is basically a great way to make sure if any foreign corporation owns anything in the U.S. to liquidate pretty quickly.
Well,
Or maybe you might want to look into that. Right.
I don't know if I would. Maybe. Look, obviously this is a problem, okay? And obviously this is going to dramatically increase the costs of doing business in the United States. Now, if that means the result is you leave the United States, fine. Maybe you restructure investment portfolios. I don't know. I mean, I spent, I'm almost embarrassed to admit this, but I spent probably 4 hours yesterday writing that post and trying to figure this out. Okay. And this is really tough stuff. Okay.
I think this is the great point to make here is, John and I we're sweating out these details over one, actually two sections of this that we've discussed today. And we didn't even get into all the way into transfers. We had to leave some of that discussion. We can't get into it all. And now we're going into detail here, and we still have a lot of questions about how this all works. So where did the Congress people get all the time to take a look at this, right? Where did they get the time to say, oh, what does this all mean? And the answer is they didn't, of course. They didn't. They're told what to do. We don't even know, and I don't even know where Section 899 came from. I don't recall any constituency out there saying, oh, we got this great...
Anthony, if you want, I can give you an answer to that. Are you asking?
Yeah.
Where it came from exactly?
Where did it come from?
So this actually has its origins in 2003. And what got it started was the response of Congress, okay, to the Biden administration's getting involved in the Pillar 2 discussions, right? So remember that, this had to do with the whole minimum tax thing. And part of the Pillar 2 has a general provision that would allow a country to tax U.S. corporations on an extraterritorial basis, right? Exactly what the United States does. And they just went crazy over this. So they put together a bill in 2023. In my blog post, I actually put all this as an appendix, largely so I just wouldn't forget it. And I mean, it was simply unbelievable. So, it was essentially a bill, it has its origins in the undertaxed profits rule of Pillar 2, right? But, it started to go further from that. And Pillar 1, of course, was an end run around digital services tax, et cetera. So in 2025, in February 2025, the Republicans introduced another bill, which actually is Section 899.
All right. Well, there it is.
So, I mean, that's the history of it. And it is, the point here is this, that changes in the world, changes in civilization and attitudes, it's more like a super tanker, okay? It doesn't shift, from one day to the next, but gradually you get a critical mass. And if you look at all these things, these tariffs, these taxes, the External Revenue Service, the immigration issues, there's, the issues with Canada. I mean, in a very short period of time, the U.S. has destroyed the trust that much of the world has had in it. And I doubt very much it's coming back. And this type of thing, look at the articles out of India and Mexico talking about, what a big deal this is and how upset they are by it. And this is invisible to Americans. We're Canadians, because these are, not remittance type, it's invisible. But, this is a major, major impact on certain groups of people. And the other thing is, India is a huge source of labor in the United States and the tech industry, lots of money for university tuition and stuff. And gradually that is going to erode.
So I guess the idea is that these foreign companies should pressure their governments to not tax them punitively as defined by the U.S. government. So there you go.
No,
Yeah.
I don't think that's going to be happening.
No. Yeah, every once in a while. I know. Hey, look, I know Keith's got to drop off, and I want to get to some questions. We'll get to some questions
Yeah, I'm
soon.
going to have to go.
So, Keith, thanks so much for joining us, and I just want to give thanks Keith so much for everything he does. I know you weren't too active today; you were doing a lot of listening, Keith. But I'll talk to you
'cause I'm
later.
learning about this.
Yeah, we're all learning about it, and you can see, it's not easy stuff, whatever, at all to figure out. And we really do thank John so much for his keen insight into this. Anyway, if you are a U.S. expat or somebody interested in these issues, if you haven't joined Keith's Facebook group. I would advise you go do that. A lot of people, it's not a tax group. It's about more of a, hey, we're trying to deal with this thing kind of thing, not a specific, hey, how do I,
supporting residence-based taxation, and also, a forum to take a look at all of your options.
Yeah.
And that's what I do individually as well with Americans overseas.
And so, and so Keith likes to discuss their problems, their particular issues. They come up again and again. And Keith, you can reach out to Keith if you want to just sort of get an idea of what you're looking at, you just want to discuss your issues with Keith, US_overseas_advocate@outlook.com.
Yeah, what I do is, mitigate the fear and take a look at the options and put together a short and long-term strategies.
There you go. That's pretty good.
All
right. Well, beautiful, Keith. All right.
Okay,
well, enjoy your day. All right. Let's get to some questions now here. This will be fun. We're going to get some questions. We got a lot of people joining us today. All right. Andrew, my common law guru. He is gonna change me. I know this, Andrew. So he's got a question here. Are penalties judicial? Is judicial process required to take property? Andrew is somebody who's really, I found, he's a fan of the channel. He really intrigues me because, John, he's always going to what's really the common law. Did the U.S. Constitution override the common law? And his point is like, no, the common law is still the supreme law of the land. And statutes overriding the common law is actually not allowed. It's actually something interesting. So Rob, I really enjoy everything you're sharing with me. Thanks so much. Good morning, Sherry. Good morning. Thanks so much for joining us. Great to see you. So I think Joby Kenobi was talking about this. I think what we're talking about with all these threats of these various penalties, Florida vacation home down 15%. Because the Canadians are out. Oh, and this is also devastating for us in the Northeast. This is terrible, terrible news for us. The Northeast Kingdom of Vermont has been a wonderful mountain biking mecca for years. I enjoy going there. I have friends with businesses up there. Really enjoy doing it. It's not going well up there. Northeast Kingdom gets a lot of people from Canada, or it used to. One of the two of the most popular bars, one brewery and one bar, are for sale now because the visits are down. And really, the impact of the loss of the Canadian trade is significant for a lot of small business owners who really, it's hard for them to move away from that. You're like, well, you kind of have your bar there. You can't really move it. So it's really, really, there we go. All right, now why are we allowed? What's going on? So Rob, thank you so much. Here you go. This is the Smith Modernization Act of 2012 under Obama allows domestic propaganda, and the number one job of the government is to lie to us. That's its number one job, is to always lie to us. What incentive does it ever have to tell us the truth? Where would we ever find that truth? Joey Kenobi says, "You tariffs are beautiful if all countries impose tariffs. Then it'd just be better, huh?" Let's see here. We'll get going here. Chevron deference. Well, yeah, there we go. We're going to see that. That comes up in a lot of things. You know what? I was thinking about that. Chevron deference is actually dead because Loper Bright overruled it, and now there needs to be some semblance.
What does Chevron deference have to do with any of this?
Well, this is why I was thinking of it. While you and I were parsing over whether or not Section 899 would apply to American owners of CFCs, John, you corrected. You explained to me why why my reading was wrong and yours would be more logical. I was thinking to myself, would a regulator agree with me though? That's what I don't know. And then when we look at FBAR regulations that have no bearing, how far deviated they could go, I kind of was thinking in my mind, well, could they just create the regulation to mean whatever they wanted it to mean? That's why I thought it was pretty relevant. And Loper Bright hopefully will give some protection about that.
Where I think there is conceivably an issue here, and again, I think you probably got to read these things 50, 60 times, before you're confident. Understand them, and who has time for that? But my impression of it is that the Treasury Secretary has sort of a residual authority to decide whether something's an unfair tax. And, that really is frightening, isn't it?
Yeah. Oh, we got a new comment. Yeah, it's absolutely. And Vin, thanks so much for joining us. Rhinos don't care about Americans abroad, Republicans in name only. And Vin, no one cares about Americans abroad. Come on. Democrats certainly don't, and Republicans certainly don't. We're giving two false choices. So they both stink, and they're always going to stink. They're designed to stink. One is just in your mind designed to stink less because the other one's agitating you to where you want to go. But come on, who would really think this is a bill that anyone would ever want? They're both. Washington, D.C. is 100% against the American people. Rome fell. Sherry, I like this. I like where you're going here. Rome fell, but it seems to have bounced back up, and Nero is back. And there we go. Rome did fall. And I think one thing that gives me pleasure is that, the fall of Rome was looked as the decline of civilization. The truth is I look at the opposite. We're told that the Dark Ages were the Dark Ages. No, the Dark Ages were the Age of Enlightenment. The Dark Ages were the best time to be alive because there was no massive government making a slave out of you. So, America will fall because you can't continue this forever. Will something better come in? Probably not. I doubt it. Okay, clarification on the remittance tax. Just triple checking, this tax does not apply to American citizens remitting money abroad. Right.
That is my interpretation of it, yeah.
Oh, right. So if you're overseas and you're remitting money, it doesn't apply.
How can it apply to a remittance originating overseas anyway? I don't think that's the focus of it.
Yeah.
But look, here's the thing, okay? At least my reading of it today is that it doesn't apply to American citizens. Well, hang on a minute. We're talking the remittance thing, right?
Yes.
Okay, doesn't this apply only if the remittance originates in the United States?
Yeah, so I think that's the answer. Yeah, I think yeah. Let's see here.
So sorry. I was actually thinking, when I started talking, I was thinking of the other thing, the 899 tax. To be clear, the remittance tax applies to everybody. American citizens can get a carve out if it's done in a certain way. And if it's not done in that way, an American citizen can get a 5% tax credit. Okay? So it applies right across the board, but there are escape hatches for American citizens. Okay? But my reading of this, I think I'm right, that to be a remittance, it has to originate in the United States. Okay? So,
Yeah, we do. We have an active commenter, Joby. I really appreciate your energy today. No, only Johnson Canadian. I'm a pure American in America. So I'm pure America. And this is what I'm just going to say, Joby. There's a lot of things going on here. And Gabe, great Gabe follows this. I would say this. If you take a look, look up Gabe's story, Gabe Morrow's story about what happened to him. And that might change your mind about really the kind of power. And I think this cheering the weaponization of taxation is really a foundationally stupid idea. No offense. But, we are the most abused people on the planet by taxes, and maybe punishing someone else isn't going to give you any relief. It's just punishing more people. So let's just be careful. I think that's, Gabe's battle was just awful. Here's one. Thank you for this, Ben. Bringing that up. I wanted to bring this up too. We're told that the gold cards, they sold gold cards. There's no gold card. It doesn't exist. there's no gold card, doesn't exist. The thing is that we see the same theme though. Well, as long as you have money, we want you. We want your money, 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 money. There's this sort of begging for foreign investment.
They want your money to come into the country, but they will punish you for taking it out.
Right.
Okay. As I was thinking about this discussion, come back to a theme we've discussed. Isn't this just one more example of certain penalty for uncertain?
Oh, isn't it? Right. Oh, no, I missed Vin's point. Hey, look, if you were announced, you should be allowed a free gold card. I'm with you, Vin. Well, if you want it. No, you don't want it. No.
$10, maybe no, a gold card at a discount.
Well, yeah, but you don't want to be a U.S. person. That was the whole point. Oh, wait, no, that's right. Your worldwide income's not taxable because you're important because you have money. And if you don't have money, then you're not important. That's the value system that I understand. If you have something that the government wants, you're important. Well, no, because the government. I don't know. I'm not sure how it all works. It's a little bit more. So here, Jason, thanks for joining us up. FACA didn't go anywhere. Nope, no relief, whatever. Sorry. I'm sorry. We have no good news to report to you. FACA.
On that, I think that if this continues, this general behavior of the United States, I think FATCA and citizenship taxation may exist on the books, but, they require too much cooperation from other countries to enforce. And, you're going to see less and less cooperation with the United States.
Oh, yeah, that might be something, yeah.
So it'll revert back to just some, a bit of taxation history that Americans will be proud of, but has, basically no impact left. I think that what you really are seeing in real time is the beginning of very significant erosion of the United States' role in the world and its ability to sort of impose its will on the world. They seem to think that, everybody in the world, is just desperate to be in the United States. You think people are going to keep coming if their money gets confiscated, if they try to leave with it? That's what's going on here. I doubt it.
No, we do have, we have picked, our renunciation work has picked up, Borchell, when we're in serious trouble, when Keith is more quiet than usual. Yeah, Keith had to step up, but he was just absorbing today, right? Another comment from Rob. Rob, all right, I want to add to this one. There's a quote, there's a saying, expecting justice from a court of law is like corn expecting justice from chickens. And you got to understand, everything that's going on right now is 100% constitutional. This entire absurd mess is 100% constitutional. Why? Because the Supreme Court said so. This is all allowed. Now, maybe some of this will go back later, but this entire monstrosity, this unfairness, this bizarreness, this monstrous government, way, way out of control, clearly adversarial to its own people. Clearly adversarial. It's all been ratified by the Supreme Court. And that is that is the biggest problem that we have. It's team federal government against us. The checks and balances, no, there's no checks and balances. It's all them. We can't say anything. They have all the power. And the federal courts were instrumental in making sure that people are denied a voice and that the government gets it all. So I think that's an important thing to consider. Let's see here. Borchell, so remitting from your U.S. Business account with EI number to your own abroad personal account might put you in trouble. I don't think so. It's not a wire. Wires are not remittances. So that's where, and even a check, ACH isn't a remittance. So we might need to look a little deeper into that. What exactly is a remittance? We didn't have time to get into that.
I think that fundamentally that's the issue here. And, when I was kind of going over this, that was what I found the most difficult to actually determine. Okay, I understood the mechanics of it, but on the issue of what qualifies as a remittance. But I think what is clear is that financial service providers are going to take we need to protect ourselves perspective on this. Because remember, what the legislation clearly says is they're on the hook for the 5% if they don't collect it. So, you're going to be seeing, when in doubt, it's a remittance for sure. And I think that you're also going to see certain types of providers just stop offering that service, period, because of the possible hassle. This is one more example of going after, people of modest means and difficulty accessing normal financial banks, institutions, etc. I mean, it really is. It's nasty. It's nasty in the extreme.
Absolutely. This is what we have here. I mean, it's, I think maybe people are getting, and this is what I would say. Oh, Vin's comment here, and this might be our concluding mark here. We're the only country practicing citizenship-based taxation. We have to have the worst passport of all developed nations. And I don't know, maybe just end you could probably end that sentence at passport, put that period right there. It really is something that we have.
No, it's not the worst. Okay. I mean, let's try to keep some perspective. It's not the worst, and it's probably not even the second worst, but it's nowhere near the best. Okay. And, in this world, in government and anything else, why aspire to mediocrity? Okay. What is clear is that the United States stands alone in this respect. It is the only country in the world that is deliberately, systematically, and successfully destroying the value of its own citizenship. No other country.
Absolutely. Yeah. And what, we got a couple more comments on this because I meant to get to this. Thank you so much, Matthew, for this. Crypto was already having a strong run. Taxing remittance will add gas to the fire, right? So you can avoid that remittance by doing crypto. However, here's the thing, and this is what was bugging me. In Rob Green, crypto will circumvent. Not everybody is sophisticated enough to use crypto, guys. I'll just be honest. And in order to use crypto, you have to set up an account. You have a whole bunch of stuff to go on. Some people just get cash and they just go to the MoneyGram and do it. And so really, then who does this actually impact? Just like everything, it impacts the people who aren't sophisticated. There are so many taxes on people who, if you don't have the wherewithal, you get abused and abused and abused. And that's where, we have a tax system that if you don't have your wits about yourselves, it will destroy you. And it's designed to. That's really what it's out. You have to have your guard up at all times against this government. So because again, you think like, oh yeah, we'll just do this, but not everybody can. Don't assume. And this is, I think, one of the biggest problems that we encounter is that if you're watching this right now, you're assuming most people have some understanding equal to yours. Let me tell you something. You are so far out there. You are so far out there. Most people would have no interest in watching this whatsoever. And if they did, they wouldn't be able to understand it. And I don't mean that as an insult, but we're talking about very abstract topics that most people actually don't have the mind for. And that is why the tyranny comes through the tax code. The number one place it will always come through is the tax code, precisely because it is so complicated. The U.S. tax code, get this, is 3.2 million words long. This tax bill that we're debating right now, this is about 50,000. You'll probably change the tax code to about 50 to 100,000 words. It's actually not that big. It's only going to change maybe less than 1% of the entire bill. But its impact is so massive. We have a 3.2 million in our tax code that no one's ever. How do you read 3.2 million words? I mean, how many words is that? A day? That's utter insanity. So this is the thing we need to understand is that most people don't understand this by design, and that's why it's all going to come through. All your tyranny. This is exactly where it's going to come through. So I think that's important.
I think that there's two themes that come out of this. It's been an interesting discussion. The first is that I would encourage, when people tell you who they are, what they're going to do, I think it's better to believe them. And, Trump very clearly talked about taxing and tariffing other countries. The big, beautiful bill is the rollout of the External Revenue Service. Okay, that's the first point. I don't think any argument can be made to the contrary. But the second thing, if you look at how this operates, that I find interesting is I saw, it may have been on X or somewhere a while ago, a very short statement that I thought was interesting. And that was, it's very expensive to be poor. Okay. And that is absolutely true, right? Because these are the people who can't make their credit card payments, you know, and all this sort of stuff, right? And what this legislation is clearly on the remittance thing, going after the poor, and clearly on the penalty tax thing, penalizing penalizing one person, you know, for the conduct of another, sort of thing. I mean, and this is going to have a long-term effect, because at the end of the day, right, it's soft power that matters, and it's sort of moral authority, and not necessarily agreement with everything you do, but at least a confidence that it's going to be rational and not designed to be evil. And, you know, the United States is eroding all that capital away daily.
Yeah, well, I think is my point. And thank you very much for those comments, John. Thank you so much for your insight today. Great show. And I would just advise people that we're going to be covering this tax bill more. There's more developments coming, and we'll try to get to the meat of the most absurd things, which often involve foreign taxation. I think we're about done here. I really want to just again appreciate everyone and just see where we're going, and. This is where I'm at, is that, remember, folks, we were given, Representative LaHood had his bill in there to end taxation for Americans abroad. I was suspicious of him. I was very suspicious of him because his top donor was Ernst & Young for the past 10 years. Ernst & Young, he makes more money off the tax code and compliance than any other firm I can think of. So I didn't really think it would go anywhere, and here we are. You know, here we are. It didn't go anywhere, and it didn't make it into the bill. And Donald Trump is completely silent. He's forgotten his own promise. So I just want to, for those of you out there who are still promoting this bill, just understand. You need to understand what it is and what you're authorizing. And you're authorizing punishment against people, and that punishment will always be turned against you. So be careful what you ask for. This is Anthony Pear for John Richardson, Keith Redmond. Again, want to thank everyone for joining us, and be sure to subscribe, follow on Twitter. We will be going live next week, and if you're subscribing, you'll know when we go live. We love our live audience. Thanks so much, everyone, for joining us today.